and you're probably not going to hold on to the property for the full 39 years.
No, right. And so with the qualification of it being short-term rental properties only, is there any clawback? Like, for example, I used to be a fix and flipper as well, right? So if you're a fix and flipper and you fix the property up and you run it for short-term rental, you list it for sale, which we do that quite a bit. We'll sell a property and still have it listed as a short-term rental, generating revenue in the meantime, especially some of the luxury and higher end properties that take longer to sell. And so in that example, I may end up selling it as a fix and flip a year and a half later. But during that first year, I ran it as a short-term rental. Is there any issue with me doing it that way? The fact that I sold it a year and a half later, is there any penalty for that, or any issues with us doing if we were to do it that way?
Sure. So when you sell a property, you're going to have to pay depreciation recapture, whether that's a long-term rental or a short-term rental. And the depreciation recapture is higher on short-term rentals. So in those kind of instances, I don't recommend necessarily selling it outright. I recommend working with your accountant again on the back end and looking at some strategies to reduce your taxes when you sell. For instance, a 1031 exchange is probably going to be the best bet in that kind of situation.